How you doing, everybody? This is Kurt Henry at the Mortgage Center, and this is a weekly mortgage update just to let you know what's going on in the mortgage market. We are mortgage brokers. We work with multiple banks and lenders just to get them to compete for you to get you the best deal when you're getting a mortgage. And so this is a weekly mortgage update. In terms of mortgage rates, a 5-year fixed rate is in around 2.99% or so, and a variable rate is around 2.5% or so. I also just wanted to mention there's a common question of when you buy a house, what happens if the bank asks for an appraisal and the appraisal comes in lower than the purchase price? Well, it depends on what down payment you were originally going to be doing. So in other words, let's say you're buying a $100,000 house, so your purchase price is $100,000, and you wanted to do 5% down. So you wanted to do $5,000 down, and therefore you were looking for a mortgage of $95,000. Well, let's say the value of the house comes in not at $100,000, but let's say it comes in at $95,000. Well, now instead of the bank giving you a mortgage for 95% of $100,000, which was the purchase price, they're going to give you a mortgage for 95% of $95,000, which was the appraised value. So 95% of $95,000 is $9,250. But your purchase price is $100,000, so your down payment is now the difference, which is $9,750. So in that case, your down payment has to increase, because if it doesn't increase, then that means you're asking for a mortgage of $95,000 on a value of $95,000, which is 100% of the value. And you can't borrow more than 95% of the value. Now, having said that, let's say you're buying a $100,000 house with 10% down, so you're looking for a mortgage for $90,000. Well, let's say that the value comes in, the appraised value doesn't come in at $100,000, but let's say it comes in at $95,000. Then the bank, if they're looking at it saying, well, you know, you're asking for a $90,000 mortgage, and we're gonna, and the value is actually $95,000. Well, that means our loan to value is, it's not 90%, but it's now 94%, because 90,000 divided by 95,000 is 94%. So in most cases, they'd still be okay with that, because it hasn't put the loan to value more than 95%. Now, another scenario is, let's say you're buying a $100,000 house and you want to do 20% down. So in other words, you're looking for a mortgage for $80,000, and in that case, normally you don't have to pay for CMHC or Genworth. So let's say the value, though, instead of being $100,000, it comes in at $95,000. Well, now if you still want to keep that mortgage, if you want to get that mortgage of $80,000 and the value is $95,000, well, now you're not borrowing 80% of the value, but you're actually borrowing 84% of the value. So it should still be okay in most cases to get the approval with that, although now it's gone from a conventional mortgage where you don't need CMHC to a mortgage where you do need CMHC, because it put the loan to value over 80%. So it can be complicated to kind of explain without seeing it, written down. But if you do have any questions on that, just give us a call. The number at the office here is 905-436-8010. Thanks, and have a great day.